Welcome back. We will continue with the discussion, and we were talking about, the customs clearance procedure and the hassles involved, particularly for e-commerce trade. So, sir, I mean, we would like to know the customs side, the issues involved in the whole thing. The custom, why it is so painful. Now we have the risk management system, we have SCP scheme, we have so many schemes, and the customs capabilities have also gone up in terms of gathering intelligence, in terms of even human intelligence, for instance, and verifying the track records, etc., etc. So since the trade facilitation is the buzzword now, how do you think that the customs should be looking at it, and the kind of problem this is going to pose for the customs?
Many steps have been taken by the Central Board of Excise and Customs to simplify the procedures relating to exports and imports of the goods. But the speed at which they are required in today's internet age, something more is required to be done. For example, we should first address the simplifications of the procedures rules. We should say that an ordinary citizen of this country will be able to either import or export the goods within half an hour. We should address the rules keeping this in mind, and that too without involvement of any agents.
So do you think that this is a realistic kind of dream with the customs introducing the digital signature which they started providing from yesterday?
Let me just take where he left. He has rightly raised the point that the speed at which we are required to work, it's not doing there. India's ranking in trading across segment has come down to 134. Last year we were 129th. And if you look 3 years back, we were around 110. Secondly, I think there is a lot of soul searching has to be done in CBEC. We have more than 50,000 importer-exporter. Why we have only around 320 accelerated client program? Why we have just 3 authorized economic operators? In a small ports of Hamburg, there are 600 authorized economic operator. We are talking about the risk management system. The risk management system for exports entail 30% examination. When we discussed with the CBEC, they said, no, our dwell time has come down. And we said that please share with us, you are facing shortage of officers, your physical examination percentage has gone up. So on what basis you are saying that dwell time has come down? In fact, I think we are right now working in silos. We have to integrate the whole ecosystem and see how best we can facilitate the trade. The government own admission says that the transaction cost is between 5 to 8%. If by taking these initiatives you address it by 50%, you are providing a gain of $12 to $15 billion to exports alone, which is much more than whatever benefit has been given to the export sector.
Absolutely, sir. Absolutely. Yeah, Mr. Rahul, your experience with respect to this, the customs side, now that you have so many, facilitating schemes have been put in place, risk management, SCP, authorized exporters, etc. of course. But now looking at the self-assessment mode, etc., the general tendency and the business practices to do things online, etc. How do you think this is going to work for the betterment of the trade?
See, the concepts are there, but if you look, as Mr. Sahai pointed out, ACP, rightly pointed out, no, not everybody is going for ACP. AEO is still a distant dream. People who don't find that there is any benefit being in AEO, given the documentation requirement and the kind of process one has to undergo to achieve that AEO status. And secondly, the second constraint is there is no MRA or mutual recognition agreement except with Hong Kong. Indian government presently doesn't have. So it doesn't give me any benefit if I become an AEO. That's the major hassle, or I would say. But having said that, yes, online has happened. EBRCs have come in. But if I had a recent experience, EODCs have been issued. EODCs or export obligation discharge certificate issued under advanced license or EPC scheme goes to customs. Normally, they are not traceable in customs, and then the notices start coming in. At times, the notification, custom notification, or even the foreign trade policy says you will submit the application in 60 days after completion of export obligation period or expiry of export obligation period. First of all, I know 60 days is an indicative timeline. The exporter also takes their own sweet time. Yeah. Second part is, at times I may take time to completely examine, issue you an EODC because I need to verify a lot of things. The documentation part, which I hope now will be, some ease will be there. Then the custom notification says within 30 days you will give me EODC. Yeah. Now there is a 60 and there is a 30. And the customs, and I have a recent experience where the assessee has been called that you have not given me the EODC, the exporter is saying, and he has got a letter from DGFT that the matter is under examination, I cannot. He said, if you don't, I will issue in a demand notice, but they are not talking to each other. Okay. That's the problem.
So, but what is exactly preventing CBEC or the customs, from going ahead and, making it easier for the...
No, I personally feel it's an issue of will. And let me tell you that in 2005, as part of Government of India delegation, we visited Philippines. Philippines is at least 10 years behind us in IT. They had a big room, which was known as one-stop shop. There were 40 authorities sitting in the shop. Exporter and importer was going with his document, getting whatever approval physically, and within 35 minutes he was out. And if India as a world leader has put effective EDI in rest of the countries, why we are not in a position to do EDI here? I came to Delhi in 94, and from 94 till 2015, I am still attending the meeting of EDI. It has taken us 20 years to bring complete EDI.
Right. Absolutely, sir. So what do you think, sir? I mean, as per your experience, is it the audit, sir, that post-clearance there is no audit in place, and that is something which scares the custom authorities or the CBEC that, we will be losing our revenue completely? What is happening, sir?
Post-clearance audit is a must for 90% of the imports, but you must have capabilities to do that audits. Worst thing in the department is that we do not have capabilities. We still believe in the physical examination and these things.
So we have to move from this.
For example, I will say, suppose the exports, drawback claims. First you file the shipping bill, examination, then let export order is there. Then airlines or the shipping agent, they file EGM and these things. Then EGM is not filed for weeks or together, or EGM errors are there. Those drawback claims will not be sanctioned. You will find thousands and thousands of drawback claims which are pending because of not filing of EGM or EGM error or queries raised to the exporter. So my suggestion would be that let export order should be considered sanction of the drawback. Let export order, the drawback gets converted to the bank account and the goods goes. If the some goods are diverted for the back town to the town, then those drawback can be recovered because goods are still with you. So that will simplify so many things.
Right, so let's hope that the government is listening and they are going to do something about it. We will go straight to this Make in India. Maybe we will start with Mr. Jain. You have seen this. To what extent this, the foreign trade policy has given a major boost, or it is incentivizing the Make in India, the mission of the Prime Minister?
In fact, if you see the policy, so they have tried to boost the Make in India concept by several ways. One is as under this MEIS scheme. So if you see the list where the Indian manufactured components is more, so there the rate of this benefit credit, that is 5%, whereas in case you are utilizing or using the imported inputs, so their rate of credit is less. So that is one way of boosting. Another is in the case, say for example, in the case of EPCG. So there the EPCG export obligation, in case you are procuring the capital goods within India, so then your export obligation would be instead of 6 times over a period of 6 years, it would be 4.5 times over a period of 6 years. So then you will be benefited and it will give some sort of impetus to the domestic industry. Simultaneously, so far as this deemed export related chapter is concerned, in my view, this chapter was primarily meant to give boost to the domestic industry. There are certain situations where the goods are to be imported on payment of duty. So in its wisdom, government long back, so they provided this chapter of deemed exports, saying that instead of importing, if you procure them domestically, so those supplies shall be treated as equivalent deemed export, and the person will be considered as a deemed exporter, and he shall be eligible for various benefits specified therein. But unfortunately, over a period of time, we have seen that DGFT office itself is utterly confused. What benefits are to be given, how are to be given, to whom they are to be given. For example, they are talking about advance authorization, duty drawback, refund of terminal exchange. I will just try to clarify that this is not serving the purpose at all. because number one, these policy related decisions, so they are not properly aligned with the customs law and the excise law. In the recent policy and in fact in the last year policy, they stated that where the goods are supplied to a project which is funded by some international agency, so those will be exempt from duty and no TED refund will be allowed. If you see the list of those agencies, one of them is Japan Bank of International Cooperation. And if you see the corresponding excise notification, so there is no corresponding excise notification providing the exemption from excise duty. So many of the persons, they believe on the policy and they clear the goods without payment of excise duty to a project funded by JBIC on the ground because it is mentioned in the policy, those are exempted. And later on the excise department, they issue the notice saying that there is no exemption under the excise, we will not provide you this exemption. So this is one way.
This is something which is continuing for more than a decade now.
Yes.
Bank of Japan.
Yes.
So many hundreds of cases.
Hundreds of cases are there.
The multilateral agency is a
likewise, recently, one EOU, they supplied their goods to a project which otherwise eligible for a deemed export, which fall in the category of the deemed export. So the development commissioner, he took a very strange stand, saying that these are the goods if supplied from DTA to EOU, those are deemed export. But if the goods are supplied from EOU to DTA, those are not deemed export. So then we have to do a lot of labor in making them understand that you see, here even if the goods are supplied to DTA, but those are supplied to a project which is otherwise eligible for deemed export benefit, to ONGC type of project which are otherwise. So then he was satisfied, okay. So then he says that there is no provision under the policy which regards that supplies made by EOU can also be considered as a deemed export. So if we try to convince that there is no bar also in the policy, it simply talks that goods manufactured in India, if those are supplied to any of the categories, those will be considered as deemed export. So goods manufactured by EOU, those are also manufactured by India, and therefore those should be, okay, he agreed. And then he raised another point. Policy says that in respect of the goods supplied to a project, so those will be exempted from excise duty because those are supplied under the international competitive bidding. So then we try to convince him that okay, in case DTA supplies to a project, so then the corresponding excise notification is there. But if EOU supplies, that excise notification is not applicable because of the proviso under Section 5 of the Central Excise Act. So EOU is under compulsion to supply those goods on payment of excise duty.
Yes, but Mr. Rahul, I mean this problem, is it an actual problem or it is a deemed problem?
So it is a problem because of the, I would say, the difference in the interpretation and the way the notifications are worded. I had the same situation in the deemed export. Even there is a situation where EOU unit and the SEZ units, when they have supplied to domestic tariff area, the service units, the notices have been issued that since the SEZ Act says the services which are covered in GATS or which are in the rules against which foreign exchange is earned. So you have not earned foreign exchange, hence you have violated the LOP concept, and notices have been issued and recovery and penalties have been imposed. So these are the issues that keeps on
in policy itself. So there is mention that deemed export, those are eligible to the deemed export drawback, right? Policy further clarifies that in case all industry rate of drawback is there, so that would be allowed. Right. All industry rate of drawback is there, both for custom portion and excise portion taken together, then those will be allowed. But if the person has availed the SENVET credit, then the custom portion will not be allowed. And in that situation, he has to go by the brand route of drawback. Effectively, when you are making the situation comparable with the physical export, in case of physical export, suppose I have taken the SENVET credit on my inputs and I export my goods out of India, whether I can take the custom portion of the drawback or not? Answer is yes. So then why the same benefit should be denied to me in case the goods are supplied to me? So as a result, as of now, nobody is in a position to take the custom portion of duty drawback, and effectively it is not practically possible for everyone to go for the advance authorization route.
Right.
So in fact there are so many other inconsistencies also,
right,
so which need to be reconciled.
Right. And so we will go back to the Make in India thing. So any other stimulus apart from Mr. Jain suggested, so which is going to be real stimulus for Make in India?
No, in fact, Make in India campaign talks about 25 sector. Many of the thrust sectors of Make in India are part of the special sector which has been identified in the foreign trade policy. I think the foreign trade policy recognizes the fact that it is only the manufacturing which can sustain your exports, and therefore there has to be linkage between Make in India and your foreign trade policy. Two instances he has already highlighted where the government has tried to encourage domestic value addition, which will spur manufacturing in the country. But I think there is need to take many more steps, because unless you are propelling your manufacturing, you will not be succeeding in exports.
Absolutely, sir. Absolutely. So, sir, apart from this, we will be touching upon, sir, the ease of doing business, which appears to be the underlying, the philosophy, while integrating all these three mission mode projects. So, sir, we will start with this online filing of documents, paperless trade, 24/7 ecosystem. So, how do you think, sir, to what extent this is going to leg up our exports?
So far, transactions with the DGFT are concerned. There is a filing of the IEC application online, it will be accepted. This CA certificate, Charter Engineer certificate, they can be sent through scan, these things, they will be accepted. There is no need of any physical presentation of the documents, like EODC, Mr. Shukla mentioned, that it will be provided online. So those are very good step in that right direction. And in export, they have said that these shipping bills can be downloaded after providing the digital signatures. I will suggest that in terms of imports also, instead of giving packing slip, invoices and taking the hard copy of the bill of entries, that should be done away with. This custom houses are occupying so much space of the hard copies of the bill of entries and these things. This should be kept on the digital mode only. That will be a great step. And secondly, they have said we will provide advance ruling system to each importer, exporter. It's a very good idea. But the point is that advance ruling must decide the case within 1 month maximum. If it takes 6 months or years, no point of this advance ruling.
But who will give advance rulings? Is authority for advance ruling?
Yes.
So this same authority. Which is, which have to, they will have to set up more benches.
For example, you take RTI. RTI now this appeal with CIC, it has bundled up. It will take 5 years to get the relief. Then whole purpose of the RTI gets defeated. Similarly here, if advance ruling I do not get within 30 days, an importer or multinational company, they will not wait for 6 months or 1 year.
Right, so it will fail the objective.
No, in fact, I will go a step further on the trade facilitation. When we are talking about the online system, I fail to understand why an exporter has to file an application to get the benefit. You are not asking for a fee for focused Chapter 3 schemes. Shipping bill will come from the customs. EBRC can come to your system. You calculate the entitlement and send it back. Why you want an application? Similarly, for discharge of export obligation, each shipping bill has my license authorization number. EBRC has the same. You calculate whether I have met the export obligation and send the discharge certificate directly. I think we should move into that direction. We should not wait that exporter should file an application or he should file for discharge of export obligation.
And it will stop this rackets.
A lot of interface can be cut down.
Another thing they have said in each of doing business. They say conferring on the appellants in trade dispute the right to either further appeal or further review by the administrative authority or the judicial authority or any other recourse. Review on these decisions will be settled within a set period which will be specified. Now you see the pendencies at the Supreme Court level, at High Court level, in tribunal. The cases are pending for years together. Adjudication. Cases are pending before the commissioners for adjudication. There are so many provisional assessments of the bill of entries which are not being reflected in the monthly reports. So many things are pending, but nobody is taking the action. Unless you set a target that if appeal decision is not taken within 6 months, it will be deemed to have been allowed. Unless those things are taken into consideration, this will not.
Right. So on this note, of course, a lot has been done on the front of ease of doing business, and a lot more needs to be done. The Honorable Minister, even the Finance Minister and the CBEC, the senior officials will have to take into account. There are many takeaways, from the panelists today. A lot of valuable suggestions have come. Some of the importers who were actually, availing certain benefits in the past, the benefits have been reduced in terms of percentage. Probably they will be little unhappy with the policy. Probably it's a deliberate decision of the government. Looking at some of those oversights need to be taken care of. The dim export continues to be a battle for the exporters, for the manufacturers, for the policymakers as well, because they do not appear to be very keen to sort out this issue. Probably the minister would like to look into it. So keeping in mind the fact that the Indian exports, the wheel of exports rather, has turned full circle. We had 2% of the global trade in 1950s. We have reached the same 2%. A new policy is in place, hoping that our exports will almost double to $900 billion in next 5 years. Of course, it's a very realistic target so far as our size, our strength, our capabilities are given. Intentions of the government are very fair, very good, appreciable, but on the ground level, a lot of bottlenecks have to be taken care of. Those intentions have to be further translated into those expressions which do not generate more litigation. As rightly said by Mr. Gupta, that adjudication side of the custom houses, we have a lot of adjudicators. And some of the posts probably lying vacant. Probably that is a low priority area for CBEC. But that aspect needs to be taken care of. So on that note, let me thank Mr. Ajay Sahai, Mr. Jain, Mr. Rahul Shukla and Mr. M K Gupta for contributing to this wonderful, insightful discussion on this issue. I wish all the best to the Indian exporters and also the minister, at least for the foresight and a wonderful framework putting in place. Thanking you for watching us.
Thank you.